Hey everyone, welcome back to Corporate Decoder. Today VC just filed an 8 and I am spotting a crucial default notice that could spell trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing flags a default on a promissory note, potentially triggering serious consequences for the company. So, VSEE Health Inc. has just put out an 8K filing in simple terms. An 8K is like a press release for public companies, telling investors about major events that happen between their regular financial reports. Think of it as an urgent heads up. The main event here, detailed in item 2.04, is about a triggering event that could make the company's financial obligations much worse. This is a big deal because it directly hits their bank accounts or financial commitments. This filing tells us that on the 12th of June, VSEE Health received a notice from Addy Funding LLC. Addy Funding is the person or company holding a very important debt document, a promissory note. This note is for a significant amount, around $271,739. It also comes with an original issue discount, meaning the company effectively borrowed more than they received up front, which is a common way to structure certain debts, and it increases the total amount due. Now, the really critical part is what Addy Funding claims in that notice. They are saying that VSEE Health has triggered an event of default. This means VSEE Health has broken the rules of the agreement associated with this loan. The reasons cited are pretty specific. The company allegedly failed to file a document called a resale registration statement on Form S-1. This document is usually needed so that certain people can legally sell shares they received. They also allegedly failed to file another Form 8 related to a purchase agreement, and didn't give instructions to the company's transfer agent. All of this was supposed to happen by the 11th of June, and it didn't. Here is where it gets serious. The promissory note gives VSEE Health a grace period of 10 trading days. That is essentially 10 business days to fix these problems, to cure the default. If they can't fix it within that time, Addy Funding has a lot of power. They can demand all the money back immediately, which is called acceleration of the debt. They can also go after any assets that were pledged as collateral for the loan, and they can even ask for their legal costs and fees to be paid. This is the kind of situation that can quickly spiral out of control for a company. This is similar to what we saw with companies like Bed Bath and Beyond and Tupperware, where financial distress led to a cascade of problems. When a company defaults on its debt and the lender accelerates the payment, it can create a severe cash crunch, forcing desperate measures or even bankruptcy. If VSEE Health can't come up with the funds or a resolution, they could be looking at significant operational disruptions or a forced sale of assets. VSEE Health is saying they are looking at ways to sort this out. This includes trying to reach an agreement with Addy Funding. They also state they are keeping all their options open, meaning they are also considering their legal rights and defenses. It is a delicate balancing act between trying to resolve the immediate problem and protecting themselves from any unfair demands. The reality is, though, that when a default notice like this is issued, the company is in a very weak negotiating position. This filing also points us to previous filings where the actual loan agreement and the purchase agreement were submitted. This is standard practice, but it means the details of the debt and the original deal are publicly available for anyone who wants to dig deeper. The report is signed by Imwijilai Ziku, who is listed as the Chief Executive Officer of VSEE Health Inc. This shows that the company's top leadership is aware of and dealing with this critical issue. Looking at the broader picture, VSEE Health stock, specifically VSEEW, has been trading at extremely low prices. Around 6 cents according to recent data. This default notice on top of such a low stock price suggests the company is facing significant financial headwinds. The lack of institutional confidence mentioned in some recent headlines also points to investor caution. When a company is in technical default on its debt, it can severely impact its ability to operate secure future financing and keep its stock listed on an exchange. It is a clear warning sign for any investor. My biggest concern is the potential for this default to snowball. If VSEE Health cannot resolve this within the 10-day trading day cure period, Addy Funding's legal options could quickly lead to a situation where the company is unable to meet its other financial obligations. This could trigger a domino effect impacting suppliers, employees, and potentially leading to delisting or bankruptcy proceedings. The tight timeframe and the aggressive actions of the lender are definitely red flags. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.